Hello, everybody, and welcome back to another episode of the Commodity Insights Podcast with Connor and Vince here. It's the 28th of February. Looking into the markets here, we'll get started with the grains. It looks like the May corn was up 6 3/4 of a penny today at 4.30 1/4. The December new crop corn was up 4 1/4 cents at 4.64 1/4. And looking into the soybeans here, the May soybeans were up 5.5 cents at 11.46. And the November new crop soybeans were up 6 3/4 of a penny at 11.36 1/2. Another market here too. It looks like the Kansas City wheat was down 3 cents at 5.82 3/4. We'll get started talking about the grains here with the corn, Vince. After three good closes here in the corn market, it looks like we're kind of getting to the top of the down channel that we've been trading in. Is there hope that we could break out of that tomorrow, or are we turning the corner here and finding a bottom, or what are your thoughts with that?
I think there's always a chance that you could break through it, but typically you're about 9 cents away from that 20 period moving average. And when you've been away from it this long, usually you're going to get closer, touch it, maybe go through it, but get a pretty good pullback. But I think you've at least changed that trend of a day or day and a half rally is all you can get. But you look at this, if you're one of those producers that was out there and sold corn in the last 3-4 weeks, you're not happy with it. If somehow you wanted to reown it, you're probably looking at a time frame to do that. So give us a call at the office. We can kind of walk through and see what may work best for you.
Is there any other things you've heard fundamentally in the corn market that's kind of spurred this 3-day rally, or is it just technical things? I know we're really oversold in both the corn and the beans. Is that something that's still going on, or has there been some corrections on that? Or
I think that's the biggest part of it. When we went down on Monday, put those new lows in, you put those lows in by about a penny or penny and a half. And I think when they didn't find stops, somebody came in and bought it. And again, you really thought that you probably need to get into that first hour or two on Wednesday morning. And if you weren't going back lower, maybe you were okay. I don't think we'll know for a while if it's a bottom, but I would think there's going to be some people buying if you get a 50% correction or more just to take a shot at it.
mm-hmm.
And if you're a livestock person, you need to do some feed needs. This may be a point to try to reown some cash or whatever you need.
And looking onto that soybean market, it hasn't had quite the pretty closes like the corn has in the last 3 days, but it still has held the low. Is there any news out in that market? I know they had a flash sale of some beans, I think, yesterday. Any other things you've heard that are kind of helping that hold that market up?
No, the last 2 or 3 days, you've got some private forecasts that have lowered that Brazilian crop. One of them went to 153.3, I think it was on Wednesday. The other one on Tuesday was 147,000 metric tons. So it's one of those things that it doesn't look as good, and I don't think it will just because of Brazil being cheaper than we are. But just holding its own, I think, is a good sign.
One thing I did notice in that bean market, if you look at the new crop corn or new crop bean chart, back in it was May 31st of 23, we put a low in, and that close was at 11.22 and a half. And the other day we come down to 11.22 3/4, and that seemed to hold it pretty good. I'm hoping that can kind of act as a support level there for that new crop bean contract. Looking into the wheat too, I know we talked about the other day, Vince, that the wheat market, it was coming up and trying to test those lows it put in January, and it just can't break through them. Is there any other news? It seems like we're just kind of chopping sideways through the last week in that market and no real up or down.
And I think that's really what it is. They're looking for news, and the Bears are still winning the battle, and they're probably just getting a little more timid the last few days. Didn't really like when you came in on Wednesday morning and you're 12 lower in that KC wheat, but there was some crop conditions out this week that did improve from last week, and we're ahead of schedule as far as we're out of dormancy. So the real question gets to be over the next month or 6 weeks, do we get any big cold fronts that are going to come through to change something. The other note that was out there, I think it was on Tuesday, talking about Ukraine and Russia. Russia could be close to a record weekly export sales. I think it was like 3.8 million metric tons. Mm-hmm. The record was right around 3.7.
Okay. And is there any other thoughts you had on any of the grain markets before we move on, Vince, or anything you saw that you think we should point out to our listeners?
I think they just need to watch them over the next few days. If we can get through this week and not put new lows in, it would be a point in there that those could be some pretty good defense points back there on all, whether it's corn or beans or wheat, for someone that may want to re-own something they sold.
Mm-hmm. And looking into livestock, here's some prices on the feeder cattle. We had the March feeders down $3.60 today at 249.40. The April feeders were down $4 at 254.92. And the live cattle markets, the April lives were down $1.67 at 186, and the June lives were down $1.42 at 182.15. Seems like those markets in the last couple of days have had a little bit of a pullback, kind of a healthy retracement, especially those feeders. They've kind of been taken off the lives. I know they've kind of seemed to start trading sideways. Is this kind of a short-term high here we're thinking, or?
I think it's a good possibility. 3 times since we did our video last week, you've came back and put in slight new highs, but not being able to close over those, whether it be feeders or fats. And I think after a couple of times, you got traders saying, hey, I think this is a place where I can try to sell this, whether it's a speculator or whether we've got hedgers coming in and they know their defense points. So I think that's what we're seeing on Wednesday's trade down. We did go below Monday's lows, which I think was key and probably tell us we may have some more of the downside. I think the real question gets to be cash market has been good. If you look at the sales on Tuesday compared to Monday on the feeders, I think they were right at $6 higher. So a good trade in there. On the fat side, the question is, will the packer try to come back and save some money this week in the cash or beans? We've got boxes up here, which are at 4-month highs, an unusual time of the year to do that. Are they going to be content just because they have enough demand to at least pay steady money?
Mm-hmm. Is there any other fundamental news, I guess, you've heard out there, or anything that we should be looking forward to in the next week or so that's coming out? I know we had the cattle on feed and we put out a little episode about that and kind of covered the details of that, but any other reports, I guess, or things that could shake that market other than just technical information?
Well, on Monday afternoon, we did have the monthly cold storage report. And if my memory is correct, I think beef was down 11% year on year. Pork was down 10%. Talk of in this first quarter, I'm just going to pop back and forth, but on the hog side, that we could have a sow slaughter of 100,000 head, which is huge. You take that and you look at from the Chinese side, right now they're looking at their sow herd being down about 6.9% from last year. So it appears in that whole meat complex, no matter where it's at, we're setting up of lesser numbers. So the real question is, how good is demand to hold up if we can push it higher or just hold it together? But I think sideways to lower is probably where you're at on all those meats over the next week or so.
And speaking of the hogs, it looks like the hogs had another good day today. The June hogs were up 20 cents at 99.52. That market sure looks like it's making a third leg up there. Is there any fundamental news, I guess, what we kind of just talked about, but anything else that's really pushing that market? Or I guess, how high is it going to go here?
If you look at it last week, you had some decent cash. And it was up days and down days. By the end, you were $2 higher for the week. Pork cutouts were about $4 higher. And I think the combination of that is really what's holding it together. When you look at that April contract, probably $89. And we got close to that the other day. I'm not sure we're going to do a lot more than that short term. The futures are about $6 premium to that index. And that's about where they should be this time of year, being we're not in April yet. Summer months, I think we could go higher. It's just a question of, are the people ready to put money in here? I think those guys are long 48,000 contracts or 42,000 on the hogs, which isn't a huge number, but we're definitely a huge change from where we were 6 weeks ago.
Mm-hmm. One other market I guess I wanted to kind of take a peek at is that diesel market. I know we sent a rec out to maybe lock in some needs on that and the cash side of things this week, but it looks like that market still today was trading kind of down in that same level where we sent that text out. Some cash prices, I guess I've heard, is anywhere from that $2.80 to $3 delivered to the farm. I don't know. What are your thoughts on that, Vince? Should a guy hold on a little bit more and try and see if we can have a little bit more of a pullback here in the next few days? Or
when you look at how we closed on Wednesday, we did put some new lows in for the week. Not that it was terrible, but when you look at some of the stochastics, you are below the halfway point. Could you take another 5, 6, 7, 8 cents off of it? You could. And it's probably one of those things, if you haven't done any fuel yet for the cash side for this coming year, maybe you should do at least 25% of it if you can get something at 285 or less. But timing wise, we're in that second to third week of February, a little bit past it, but that would be a normal seasonal time to buy. So there's a couple of things telling me I think you really got to look at it and do part of it. If you would get it down, and I'm just going to use May heating oil as a reference, I think we're somewhere around 256 today. If we got that down a bit lower than that, maybe in that mid 240s, you probably got to do at least 50% of your needs for the year.
And do you have any other thoughts about any of the commodities, Vince, or anything that you saw or found interesting this week that you think we need to get out there?
I think we got to watch the U.S. dollar. It's been strong, and we're backing off. And again, I think that could be choppy short term, but that's definitely going to make a difference on our exports, as we all know. But we can shop around and do things, but unless we get that down to 94 or less, I'm not sure it's going to be a huge spark short term on exports. But the more we go down, the friendlier it's going to be longer term.
I think with that being said, we'll wrap this one up, Vince. Thanks to everyone who listened. Feel free to like and share this video and subscribe to the YouTube channel. That all helps in the making of these podcasts. And we look forward to putting out another one next week. Thank you.